Hey son, you done driving? You've been at it all day. You ready to get out? Are you ready to get educated? Come on down, let's get started. Self-educated entrepreneur. And today we're going to talk a little bit about, or maybe a lot about, CMBS's, commercial mortgage-backed securities. And that is playing a big role today in our economy, in our market. This being resonated around the world is what is going to bring down the economy in this country. And it's not just social media here in America, but it's getting resonated all around the world. People, analysts, those higher up that work with this stuff daily are seeing where this is going. And commercial mortgage-backed securities are basically, as like in 2008 when the economy had collapsed, or we went into the GFC, that is due to poor screening of mortgage-backed securities, like residential home loans. This time around, it's the commercial buildings, the commercial loans on those buildings. And what has basically transpired is this started, and what's breaking the back on this is the pandemic and what had transpired and started. Now I took some notes here, so I'm going to look down just for some bullet points, but the big thing is these hedge funds. I'm sure you've all heard about BlackRock, Blackstone. They've got a lot at stake. Last November, they put a lockdown on anyone drawing off from their investments with them. They've shut the door, put the padlock on, and said no, because they know if there's too much liquidity going on, too much money going to be pulled out, to cover that, they're going to have to sell assets, which is commercial buildings. Those buildings are now devalued from what they were initially mortgaged at. So the price has come down on them. So they know they're going to take a loss on them, which in the scheme of things, it's a trust. BlackRock, Blackstone, and corporation we're going to talk about here, McDonald's, there are REITs, real estate investment trust. So the trust is going to take a big loss. They're trying to hold on to their, if you'd want to say their hegemony, but they don't want to go broke. These investors, these, and I don't want to call them venture capitalists, but they're big investors. So there's a lot of fear with that going on. The big thing with the CMBSs is they are becoming around to maturing here in the next 3 years. So therefore, these debts on the properties, they got to be rolled into new debt. And being rolled into new debt, they've been doing this ever since the GFC, and they've been able to borrow and re-establish new debt by rolling these over on 0% or free money. That is now gone. The property values have devalued down. They know it. They're trying to front run this and trying to hold back, especially with Signature Bank, who was sitting on $90 billion of CMBSs. Therefore, nobody was touching them. People went into Signature Bank. This is the bank. They didn't go bankrupt, but they just went out of business, or for the most part. So no one would touch the CMBSs. So the FDIC, along with the Federal Reserve, they said, First Citizens came in, they gave a huge discount on that, like $16.5 million discount on these CMBSs to take them over, because everyone took all their assets but that. New York Community Bank, their flagship bank, Flagstar, took all the other assets. So First Citizens now is going to be sitting on these CMBSs with them. You're going to see a lot of your regional community banks sitting on a whole ton of these CMBSs. across the board. Now, and to elaborate on that, not only the assets, but not only the value of the property, but the interest rates have gone up, and 5% and higher. So going from 0 to that, it's became more expensive to roll those bonds, which is what a CMBS is just a bond. It's getting way more expensive to roll that in and finance that into it. Now, here's the thing with the pandemic. When the pandemic started, they sent everyone home. They said, don't come back to work, stay home, work remotely. So for the last 2.5, 3 years, people have stayed home, or they have left. Like New York and California has seen mass exodus of people that have left high taxation states to cheaper places because they can work from home remotely. Now, these office buildings are, you know, these commercial buildings, these CMBSs are on office buildings that people have worked at, retail stores like your strip plazas, malls, and therefore they're empty because a lot of malls, everyone was staying home and they were shopping from home. Amazon was showing up at the front door, dropping off packages, so no one was needing to go out to retail stores. So foot traffic was completely diminished and gone and down. So they had that's the other reason. Now that these holders of these CMBSs, whether it's their company using the building or they own the building, say like BlackRock owns the building, they lease it out to a company. Well, the company is now, they had sent their people home. It's going on 3 years. These people aren't coming in and using it. They're like, why am I paying a lease? Why am I paying a rent on this, and utilities and the maintenance, you know, the janitorial stuff? So they're just like going to these people at first and saying, we need to renegotiate what I'm paying for on this, and it's not been getting too far with that. So they're like, then screw it, we're out. And they're walking away from these buildings. And in turn, BlackRock has already walked away from one building, one of their flagship buildings in New York City, and I believe you're going to see them walk out on a few more. That's where things are going right now, because you're going to see a lot more of these empty shell buildings in the industrial, well, I want to say industrial office complex or districts like that, professional districts area. So that's really hit hard, and not a lot of people want to come back to work. Hey, they're like, I like what I'm doing, and if they're being forced or told do it or you lose your job, some are coming in, they're consolidating their square footage space by sharing desk, alternating, coming in 2 or 3 days a week. So that's going on, but they don't need that square footage anymore. They're finding that they're getting as good, if not better, results having their workforce remotely work, you know, from home or a different site. Now we're going to look at McDonald's. And McDonald's, as of this weekend, told 200,000 corporate employees, salary employees, to stay home. I believe if it wasn't this weekend, it was the end of last week. They told them, don't come in between Monday and Wednesday this week, which is April 3rd, 4th, and 5th. Said, stay home. We will be in contact with you. Just work remotely from home. McDonald's is going to have to do some restructuring, because you have to understand that they are basically, McDonald's is in the business. It's a hamburger place. And you'd say, what's the CMBS has got to do with McDonald's? Ray Kroc started McDonald's. He bought from a couple brothers, and I got to look up their names. It was on my mind. I don't have it. I apologize for that. But if you watch the movie The Founder with Michael Keaton, it's a good movie. You'll totally understand how McDonald's came about. And all he did was just buy into the Hamburg franchise side, but the way he leveraged it to be very successful with McDonald's is finding the prime location of real estate to plop that restaurant on top of that real estate, sell the franchise, and then that franchise leases that property, or the building and property, but the property is leased, you know, to the McDonald's Corporation. So therefore, Sorry, my throat's getting dry. So they're making, that's how McDonald's makes their money, is they're in the real estate business, and they have prime real estate. And as you know, across the world, from Russia, China, United States, McDonald's is everywhere, and they own that property. So they have a large holding of commercial properties, not only in the North American continent, but all around the world. So now they're feeling their CMBS is coming into maturity. They're going to have to roll into a higher debt than the 0% or whatever percentage they had on the last time. So they're also getting pinched, and I'm sure they're going to be looking at themselves and having to restructure how they're doing business. And I'm sure you're going to see some of these McDonald's also closing. So I wanted to bring that in light of McDonald's. But for now, and I just want to close out on this, we need to keep this on the radar, because it's not the Federal Reserve, it's not the CBDC. Don't worry about Orange Man. Brush that under the rug. That's all distraction. That's smoke and mirrors. That's what they want. What we got to look at is there's going to be more bank collapsing in the regional banks because of these CMBSs. Therefore, we need to watch these banks, the bank runs. We need to see where the CMBSs are going to go as we go forward into the future. Yes, CBDC is going to be implemented upon us as we go through these crises, because that's how they're going to do this great reset on us. They need a crisis. They said they needed a crisis. They got their crisis. It's now happening. If you say, when is the economic collapse gonna happen? It's here. It's going on right now as I film this, as it happened this last weekend. So no kidding, this is everything you see going upon us, the bank runs, all that, everything's happening. So that was the first phase. I believe the second quarter, we're going to see these community banks, these regional banks that are holding these CMBSs. This is where things are going to start taking a twist, and then we're going to go forward, and then we're really going to feel the extreme pain in the third and fourth quarters this year. So you need to watch the CMBSs, anything that has CMBS in it, these regional banks. And these regional banks, they're the smaller banks. They're all over the place, and they're not just you know, ABC Regional Bank or ABC Community Bank. You look at your community banks. I've seen that when I was out this last weekend with my spouse. I said, hey, look at, there's XYZ Community Bank, there's ABC Community Bank, there's community banks everywhere. These banks, their biggest service is to the small businesses in your community, to the farmers and agriculture in your community. These are the real backbones of the nation, of your community, of our country. It is not the JP Morgans, the Bank of America, the Wells Fargo. Those banks, yeah, they take on big hedge funds. Those banks take on big corporations, but they also work with them on a international level. And you know, besides just a big corporation here domestically. So I just want to bring this into light. Let's keep that CMBS on track. And also, I just dropped today, this morning, the UBI. There's some other stuff to go with that UBI that is also land, real estate related, into another form of way they're going to back that UBI. So I'm looking into that. I'm going to bring that into the forefront here soon. But in the meantime, stay safe, continue educating yourself, self-educated entrepreneur.